Very good morning. We shall start the presentation. I call upon Ms. Shamima Parveen to take the session forward.
Thank you, sir. A very good morning, my dear friends from SRM Online and Distance Education Program. Dr. M.L. Jnanadasan, the program coordinator, esteemed faculty, and a fantastic morning to Mr. Srikanth Lakshmikant, who is our guest speaker for today. I take immense pleasure in welcoming all of you to today's international webinar on concepts and career prospects in investment banking. Can persons having a bank account in their own name type B in the chat box or give me a thumbs up reaction on Zoom? Oh, I see 5, 6 thumbs up. Yes. Oh, yes. 8, 9, 10, 11. Wow, that's a lot. Even for students like us, we have a small savings bank account in some of the regional banks. Well, traditional banks are focused on encouraging savings and investment banking giants are a different ballgame altogether. They are focused on maximizing your profits and managing your risk and rewards on your investment, and it is definitely not for the weak hearted. In the grand game of life, investment plays a pivotal role. It's not just about the financial aspect, it's about time, energy, and even emotions. Understanding the power of investment is a key step towards achieving success both personally and professionally. Today's webinar is not just going to be insightful remarks, but they are going to be nuggets of wisdom from one of the world's most successful thought leader, who is our guest speaker. They offer insights into risk, reward, and patience, and the myriad of factors that shape our investment decisions. Whether you inspired to be an investor or aspire to be an entrepreneur or simply are interested in becoming a personally well-grown person, today's webinar is going to challenge your thinking, foster financial literacy, and inspire you to make wise investment decisions. I now hand over the control to Adrian Gilby for giving the guest speaker introduction.
Ladies and gentlemen, esteemed viewers, and my fellow students of SRM, it is with great pleasure that we extend a warm welcome to today's distinguished guest, Mr. Srikanth Lakshminathan, a seasoned expert with over 15 years of high caliber experience in the global investment banking and financial services landscape. His journey through the ranks of world renowned financial institutions is a testament to his deep understanding of both the technical and strategic complexities that define modern day investment banking. Mr. Lakshminathan brings to the table a formidable academic foundation, including a BCom from Loyola College, an MBA with dual specialization in finance and marketing from Satyabama Institute of Science and Technology, and a master's in finance from the prestigious Manchester Business School in the UK. This robust academic background has been instrumental in shaping his proficiency across the multifaceted dimensions of finance, allowing him to operate effectively in high-stakes environments and across the financial spectrum. Professionally, Mr. Lakshminathan has accumulated over 15 years of experience with some of the world's leading investment banks and financial institutions. His career has included significant roles at ABN, AMRO, Nomura, formerly known as Lehman Brothers, Invesco, and currently State Street India Private Limited. Throughout his journey, he has developed expertise in a wide array of investment banking disciplines and functions, everything from corporate finance and capital markets to operational management and risk mitigation. Now, as the Vice President, India, Country Head for Custody and Settlements Operation at State Street India Private Limited, Mr. Lakshminathan oversees a vast team of over 300 FTE, that is, full-time equivalents across the globe. In this pivotal role, he is responsible for leading end-to-end custody and settlement operations, an area that requires not only technical knowledge, but also strategic vision, as he ensures that global transactions are executed seamlessly and securely. One of Mr. Lakshminathan's notable strengths is his experience in talent development and mentorship. He has been involved in hiring, training, and mentoring new joiners at every level, from analyst to assistant vice president and beyond. His hands-on approach to building talent is coupled with his extensive industry knowledge, making him a sought-after guest lecturer at colleges nationwide. Through these lectures, he shares invaluable insights, helping to shape the next generation of finance professionals. On a more personal note, Mr. Lakshminathan is an avid traveler and has visited over 14 countries, which has enriched his perspective on cross cultural business practices and global economic trends. His exposure to different regulatory landscapes, financial cultures, and market structures has further diversified his outlook, adding a unique depth to his leadership style. Ladies and gentlemen, please join me in welcoming Mr. Shrikant Lakshminathan as he shares his insights on the evolving dynamics of investment banking and the career trajectories available within this dynamic, high stakes industry. Prepare to gain unparalleled insights into what it is truly and what truly takes to excel and evolve in the competitive world of finance. Thank you.
Hey, hi, morning, Shrikant here.
Welcome.
So, thank you so much. Thank you so much. Been an absolute pleasure, guys. Talking to this group, right? And first of all, thank you so much for taking out your time on your personal time from your weekend and trying to attend this. I see we have more than 300 plus. Now that's a huge number. And thank you for that warm note, right? And suddenly makes me feel that, there's something that I have achieved so far. But I think one major point that was missed, and I think I am happy to share it to this group, is when I did my MBA in Satyam, your own Dr. Jnanadasan was my professor. So I think that is a testimony for the hard work that each of my gurus or teachers have put in, and major contribution by Nandasan sir to, you know, elevate me to whatever level I am right now. So thanks, sir.
Thank you.
Absolute pleasure talking to you. Absolute pleasure meeting. And uh, yep, looking forward for this session. We do have like 11 to 12. I would probably want this to go till like 40-45 minutes with obviously interactions, and then final 10-15 minute session with dedicated question and answers. And in case you want me to extend for like 5-10 minutes more, I'll be more than happy to do that. So Nanda Sasan, that's
Fine.
a good
That
agenda
is
to
fine.
set.
Yeah, that is fine. Thank
Absolutely. So before we deep dive in, just wanted to check on the team Zoom chat if anybody outside finance domain, or is like, do we have all who are from the finance domain, or any, Nanda sir, any mix of how we have?
you. It
Do
is
we
a
have all finance?
mix of students actually. Since finance being the lifeblood of every individual,
True.
so I
Right.
made it common for everybody, and 20-30% would be finance students.
Awesome.
Yeah.
Awesome. So I would try to keep it as simple as possible, right? And let's see if I'll be able to cater to all the subjects expertise that we have on this call. So with that, let's jump into our session. So before we get into it, why is this so important, right? This diagram was probably very close to my heart because that is close to every person's heart who has a salary, right? The end of day, end of month, you get this. So every first and 30th, between that you get your salary, and between that you start doing your planning, or you start planning your monthly expenses or things. So whenever we earn a salary, right, it's broadly broken up into two things. Every individual businessman, even to an extent now a lot of students, right, for them the salary, the pocket money is considered, or a stipend is considered as a salary. About they've they've started a new culture, right? They've started something which we've never done before in our earlier generations, which is savings, right? We've always done expenses. And what do we mean by expenses? That can be taxes, day-to-day expenses, the EMIs, right? Eating outside, having I am giving, okay, uh, I am actually sharing a full screen. I don't know if you guys are not able to see it.
It is
Are you
showing
guys
us
not able
it
to see
is
that?
showing us two screens, Srikanth.
I don't know. I've just given one
You
screen. I don't
can
know if
share
that's.
the window instead of screen.
Is it better now?
Yeah, it is absolutely better. The full screen is showing.
Okay, cool. So sorry for that. So yeah, we were talking about how the expenses happen, but the major part that the financial institution pays of late is on the savings, right? And when we say savings, there are a couple of things. One is obviously a short term and a long term, and short term is basically your FDs and um, RDs and all those things, right? So when we save, each individual saves monies. What happens to it? Where does it go? Who uses it? And why do we need to do it? Right? So all the governments, right, whatever we see is actually based out of our fundings or our investments. And that is why we always say that whatever infrastructure development happens or whatever good, bad, ugly that is happening is out of our money. Right. And we jovially say that if you see a road being built that is built by my money, it is built out of my father's money because we pay taxes or we save our fundings, right? And when you deposit your money into a commercial bank or a retail bank, you they use that funding, right, to invest in some other projects out of which they get the returns. So somewhere or the other, your saving is actually helping the entire nation build, and whatever growth that we see around us is because of the savings culture. And if you remember very closely, I think seniors in this group would 2008 when we had the major crisis about uh, you know Lehman bankruptcy or the subprime issues. India was able to come out of it merely because of the savings culture that we had, right? And all these issues that we are seeing of late is basically we are able to not have that much impact in terms of monetary issues or policies is basically because of our biggest assets, which is savings. Because we have so much balance in our accounts right now. The RBI has so much account, balance with them that whatever be the economic turmoil, we are able to come out of it. So even the government needs funding. So how do they get it? They have, they get it via taxes that we pay, obviously, and they give bonds for which they raise debts, right? So when I say taxes, obviously it is an expense for us, right? And when it is a debt, it is investment for the payers. We will look into how this turns out. Now comes the point where they issue bonds and the government wants to take more money or the private, participants want to have more monies. They come to capital market, right? Um, can I just open it for a second for all of you to or anyone on Teams if you can on sorry on the chat Zoom if you can let me know what you understand by a capital market, your understanding of it. And if anybody wants to speak out, I'll be more than happy. But that should not be creating a clutter. What do you understand, or what is your thought about investment to start something? Perfect. Stock market, perfect. A place where people can raise money. Is long term.
Yeah, place where
Perfect.
they're raising the money for a growth fund like for their business.
Perfect. So everyone needs money, right? Why do they need it? Very simple. They need it because they have a growth option. They think that if I invest so much, I would be able to earn so much, right? And since they do not have money capacity, financial strength with them, they would go out to general public like us or big institutions, big high net worth individuals to garner monies, right? Does does only companies require it, or do governments also require it? We just covered that part, but just wanted to make sure. Does company only the companies or the corporate require it, or does government also require it?
So both requires the capital to run down because
Perfect.
government as well as the private companies require the hedge fund from everyone to run their smoothly. Because without the capital, we cannot do any infrastructure work or anything more than about that.
Perfect. Awesome. So both of them require. So why do the government do it? Very simple. They think when they invest in infrastructure developments, and they can attract more FDIs, right? And more companies setting up um, offices in India. And then if the ease to make trades, right? If you guys follow that index, so all those are very important because it puts India into the global space. It showcases us that look how the infrastructure we have developed. So if you've seen, Chennai or any city for that matter in the last 1 2 years or even 5 years, right? You would have seen drastic changes happening, even though majority of them are not completed on time or at this moment is creating some sort of disturbances. But long way forward, I think we are making giant strides in our infrastructures. Not just infrastructure, it's not just roads and bridges and metros that we are talking about, but it's also about the various sectors that we have, the healthcare, the banking, the tourism, right? All these are very important. And for this, they also need money, right? The reason why they need money, I mean, there might be a very common question that RBI can print notes, right? Why should they borrow? Why should government borrow and pay money to the investors? Why can't they just print more notes? I hope everybody would understand that printing more notes would lead to inflation and economic crisis. Right? The cost of the price will become more. It's more about demand and supply. I really don't want to get into that right now. So the option for government, and also if you look very closely, the price to print so much money is much less, much higher than giving interests or borrowing from public or from the IMFs or any other country, where we have bilateral ties with, right? So government needs it. Now they give it in two forms, right? In capital markets, we have two forms to do it. One is obviously, the ownership, which is the equities, and the other is the debt, which is, via bonds, right? So uh, would would anybody be able to tell me what is better? Is it the bond issuance of bond? Is it better or issuance of equities, which is better for a company or at this moment for this interaction? Let's keep it, let's keep it to corporates. So, do you know any reason why, or do you think it is good to go equity or is it good to go debt?
Equity maybe. Everything has its own advantages and disadvantages. In case of debt, they need to pay the interest. In case of equity, they even though they don't need to pay the interest, the equity gets diluted.
Right. Perfect. See, and I think majority of them are saying more both good, right? And that is better as it saves tax and don't dilute ownership. Perfect. But please understand when it has to be a balance between the two. Equity and debts have to go hand in hand. The reason is because bonds, right? When company, obviously you guys know when it gets liquidated, they are mandated to pay back the principal, right? The company goes bankrupt because they don't have money. So from where would they pay the debt holders? You might say during liquidation, their assets and their liquid assets or physical assets get sold out, and from there, the proceeds would be used. I think, but it would not cover 100%, right? And when the debt is more, there is an obligation to the company to pay interest every month. You make profit or not. So it becomes, even though you borrow money, it becomes an liability. Not, no, please don't take it in the accounting sense, but it is a liability. It is like EMIs for us, right? We buy a home, you buy a car, you buy a mobile basically, or even, as small as a fridge or an AC on EMI. And if they start charging you interest, you actually, after a couple of months, start feeling it like a liability because you're paying more than what it is, right? So the cost benefit analysis on a debt is very higher, right? Whereas in equities, when they go down, there's no obligation and they don't need to pay dividends or mandatory dividends. Whenever they have profits, they can declare. So it has to be a balance between the both. And more importantly, like few of you mentioned, equities means dilution of ownership. And I'm sure nobody likes to have anybody else have their piece of cake, right? So they want to make it and they want to eat it themselves. But according to SEBI and things, we really need to ensure that there is no, you know, there has to be a striking balance between that and equity. Okay. So equity, how do we do it? Primary market and secondary market. I'm sure all of you know what is primary and secondary, but very quickly, primary market is a place where the first time corporate goes for IPOs, right? They go for raising the um, money. So there is a process called. How many of you know IPO process by any chance? Anybody? General. I don't really need technical things, but anything that you can.
Private company selling shares is IPO, right?
Perfect. Yes, but do you know what steps do we have, or what are the few
Yes, sir.
things?
Sir, it's applied to the ASBA rule. Sir, it's applied to the ASBA rule when the company is first releasing its shares in the primary market, and after they are subscribed, it can be traded in the secondary market.
Perfect. So yeah, almost there, right? Devishi, thanks for that. But yeah, that is how it is, right? It starts off like it's about marketing at the end. So it is capital markets is not just finance, and that's primarily the reason why I was asking what is the mix of this group. It involves a lot of marketing, guys, right? Because you will have to take the company or the multinational to the people on the floor to make them realize the brand value, right? How it is possible? The finance in the room are not going to do it. It is the marketing team who will do it, and that is why it is very important that we have a very very strong marketing team. So what they do is they go out and they have a you know guys. Can I request you guys to go on mute, please? Thanks. So it has to be a very strong marketing. Um,
Yeah, Bomu, Govarshini Reddy, please mute yourself.
క్లాస్
Mute yourself, Bomu.
host, can you mute? Yeah, thanks. So what happens in an IPO process, right? Very simple. It goes, am I audible, guys? Yes, on a thumbs up on chat.
Yes, sir, you're.
Perfect. Thanks. So whenever an IPO happens or a company decides that it comes into the market for a raising of funds, every single team plays it. And as I said, marketing plays a major role in it. Finance plays a major role in it, right? What happens is they create something called as a red prospectus, right? I'm just skipping the very basics and getting into the high ones because these are must knows for every IPOs. So they have a pro forma IPO prospectus, which is called the red prospectus, right? And once the red prospectus is done, vetted by the regulatory bodies, it becomes a prospectus, and that prospectus is being taken over, right? And would be distributed to potential investors at high net worths or institutional investors, hedge funds, pension funds, multinationals, financial institutions, even governments to an extent, right? So they do extensive marketing um, about their own achievements, and more importantly, to get an IPO approved, what is the one thing that is important? It is to convince the regulators, the all these investors that what are they going to do with the new money that they are going to get? Right? What are their growth options?
Sir, sorry to interfere, but I just want to ask, like, are we supposed to give our registration number in chat?
Nope.
Yeah, not
At
like
least
that.
not for me.
Not like that. We will take care of that.
Thank you so much.
I guess it's a
Yeah.
it's a chain, right? But that's okay. Um, so what happens is you need to tell them what are you going to do with the money. Now, if you how many of you are following Swiggy IPOs, I'm not sure, but if you know they've come out with their IPO and there's so much of that, they're probably 3.5 times subscribed. But the reason why they do it is when you're comparing their balance sheets or when you're looking at the P&L, they're saying for every order, I'm facing a loss, right? They are saying minus 27 rupees is what they gain out of every transaction they do, which means every Instamart, right? In Swiggy, you order in Instamart, they say instead of I'm making profit out of it, I'm making a loss out of it. So they have, I guess, 24 million or 64 million rupees or 54 million rupees in debts. And then, you know, what is the biggest thing they want to do out of this IPO? 1,000+ crores they want to invest in cold storages, right? Which means they want to increase their storage spots near our houses, which gives them that additional 2 minutes, 5 minutes leverage against their own competitors like Blinkit or Zepto, Big Basket, and all those. So they are going to convince people that even though I'm a loss making company today, if you lend me more money, I will set up warehouses and go downs near your house. And so when you order for anything, like essentials or packaged foods or vegetables, provisions, I would reach you in 5 minutes. That's the guarantee, or 10 minutes. That's the guarantee they are giving. And it takes humongous efforts to convince all these people as investors to put money in, right? So, marketing also plays a vital role, right? And once it is done, the finance would have already spoken to someone as an intermediary, right? See, there is a buyer and a seller. There has to be, you know, a common place, that is capital markets and that is your stock market. So when you have a common place as a buyer and seller, you don't know each other's face or you don't know each other requirement or who needs what, because the world is so vast. So there is an intermediary in between who is predominantly the investment banker here, right? So the role of investment banker, they get investment bank, I mean the buyer and seller together. And when a new company wants to issue or enter the primary market, these investment banks works as an underwriter, right? And this underwriter earns a huge money, very huge money, because he takes the risk on your behalf. He goes and markets on your behalf. He goes and convinces investors on your behalf. It is not only the human efforts that is being inputted, right, because of this IPO. More important thing is the reputation is at stake. Because understand, if you are backing up some person in office or in college and you say he's the best performer, and because of your words he or they, you know, get selected or they are given a seat but they fail, you really think they will, the persons who took him would blame him, or they will come to you and ask you, you actually recommended him, look at what has happened, he's not performing like the way you said. So your name is at stake, right? Your name is riskier. So next time when you go ask for an obligation, they would say, nope, last time only you really screwed us up, so I'm not going to give you anything now. So you lose your business. That is why investment bankers get paid a lot, right? And once you know they have the investors, the IPO date is set, uh, and 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 the investors are done. The investment banking will now say, okay, I'm done with my job. Now your company from a private limited is now becoming a public limited. You will take care of your holdings and your business. I am out of, you know, my job is done or my contract is over, and they will exit the agreement, right? But there's one basic question. In an IPO, it is the first time a company is coming into the market. Anyone has any clue how they would price it? How they would price an IPO? because it's the first time, right? There is no price in the market. You might say secondary market, there is trading happening.
They would keep a margin on the cost.
Okay,
Depend upon
Basing on
company
the
worth and
valuations
number
of
of
the
shares.
company and growth prospectus.
correct.
And
No, but how
whereas
would
the
they come to a
discounts are
number? So
monopolizing it. So
if
technically they can give any price.
sorry,
Discounted
So
cash
if the
flow.
discount price, it's monopoly. So like technically they can give any price.
is it so
They
easy?
announce a
So if
price
so if
range.
SRM if SRM is going into IPO, can they say I want to sell my share at 5,000 rupees per share?
Company
I'm sure.
valuation.
Depends on the company's value.
Correct.
Actually,
So
The liquidation of the
company
company.
applies.
Tomorrow
Demand of
SRM will
company
be
share.
sold. How much money can be earned?
sorry, I heard a lot of things. All of you are almost there, right? It's perfectly close to the answer,
The
right? The
demand
thought
of the
process is correct.
companies.
Company financials.
Exactly.
Market
Demand,
conditions.
the financials, yeah, market conditions, the target audience that you have, everything is there. But now, if I'm going to say, like I said, my example, if SRM is getting into IPO and I say SRM has an excellent repute in the market, it has got a good student base, it has got excellent facilities, it has got good faculties. So, can I rate my SRM at 5,000 rupees per share on an IPO? My financials are equally good. Can I give it at 5,000 rupees per share?
Then
Goodwill.
people will not subscribe.
Market
Exactly.
demand.
So goodwill.
It will be there. Yes. So, all these factors are important to come in. But if you look into the mindset, right, of all of that we have just spoken, it is from the company's perspective, right? We thought financials, we thought goodwill. Correct, goodwill is market oriented and all those, which is perfectly okay. And we feel that I am at 5,000 rupees. There is something called book building process. I'm not sure if everybody has got to understand this. This is where investment bankers come into picture. This is exactly where a part of marketing will come into picture, because book building is very simple. I will take your prospectus of SRM and I will walk into each and every investment banker. I will mail him, I will text him, I will jab him, right? And tell him this company, SRM is coming out. Can we do it? If you say that, look, these are my financial, this is my goodwill, this is my forecast, this is my growth options, these are my clean legal regulations, everything is perfect. How much are you willing to pay me? Right? Please understand the value of this IPO, even though when it comes out as a anchor bid or ASPA bid and others, it comes out as a rupee amount. It would be 340, 350, 360, 275, 280. Who decides this is something called weighted average, right? They do something called as book building. They go to every single investors who are ready, like investment banking will have their clients. So they go to every one of them and they say that, look, I am coming out, this company is coming out with an IPO. These are your financials, these are their entire details, the past historicals. How much are you willing to pay? So they would give a floor and a ceiling. I mean, they would give a lower limit and a higher limit of a price. So each company, if I go to 10 people, all the 10 people will give me their high, low, high, low, high, low, right? Based on which the investment banker would start taking, you know, into account, and they will fix a price where it is a win-win situation for all of us. Very simple. If there are two people who are ready to pay 300 and three people who are paying to ready to pay 250, the investment banker will say, okay, 300, you come down to 275. 250, anyways, you are ready there. It is just a matter of 25 rupees. You come up to 275. And that is how the 275 will be decided. I mean, I'm just giving you an hypothetical number. There's a lot of technical analysis which gets into it. But conceptually, this is what is going to happen, right? This is how you would see the pricing of an IPO happening. I see few hands being raised up. Is that for a question or a comment?
So I have a question.
Yeah.
So,
Please.
just like you said that the investment bankers can decide and can make the market price of that share. Okay. So, what if a big investment banking company comments on a firm that this company can be much more valued than the value the other investment banking are given? So, would that raise the value?
See,
They can simply
see
bias
the
the
value.
like.
No, no. See, bias happens, right? Bias does happen. Why do you think the market is so fluctuated after the IPO? The bid price is different, right? The allotment price is equivalent to the bid price, but then when it gets listed on the market, which is the secondary market, why do you see so much fluctuations happening? This is exactly what is called marketing, right? They want their clients to get the best out of it, but at the same time, they don't want to lose out. The investment bankers are they play in between, right? The clients who are paying them money to
So, sir,
sell and the
does
person
that
who are
mean
ready.
that it happened to the Reliance Power IPO that launched in 2010?
Mm, mm,
It the same happened to it. I think that it was approximately 120, 150, but then it was
mm,
listed but more less than 30.
exactly. See, that is exactly
So
why I
they
said
just
the
pumped the market value
underwriters.
of that.
See, the market value is because, see, now this is what I'm saying right now. I'm saying, for example, Shrikant is scoring 100 in the first semester. So, what is your bet that he would score 100 in the second semester? You would have seen his future past, right? You would have seen the past and said 100 mila, so he would still do 100, right? But then for some reason I fail. So the market value falls down. Simple. These investment bankers, there is something called as a green shoe option, or how many of you are aware? I'm not aware, but there is something called as a green shoe option where when the IPO happens, the underwriter, the investment banking themselves will be holding few percentage of the stock that is being listed. When the prices go up or down, these guys enter the market to give it a market stability, right? Like Reliance Power, if it was 120 and 30, if you would have taken the next 6 months or 6, 8 months, right, it would have gone at least to 60 or 80. The reason is very simple. The underwriter jumped in, he has moved the market left and right, okay, and then made sure that it stabilizes at a number. And from there on, it would have launched, a tactical buying and selling in the market to reach or breach the IPO price. This is exactly why they get their money. Right? So, do you think it is just hyped up numbers? No, because these financials are based out of audited reports, and these have to be audited by accountant generals and auditor generals, right? And it has to be vetted by SEBI. So, are we fooling people in IPO? Absolutely not. But are we, are there few companies which try to take advantage of the over goodwill? Now, I'm sure everybody would have jumped in when it says Reliance. Nobody would have bothered to look into the financials. Nobody would have bothered to look into what um, growth plans they had. Just like Vijay Mallya's case, right? 6,000 crores. Why didn't any of the banks check what was his previous record? Goodwill stood there. The magnum, the power,
Name value.
and the name. Yeah. All of them stood. Why didn't they do it? Why wasn't, are we saying our banks are so illiterate that they couldn't identify this? No. He's probably too more powerful. Right? So, in cases where you see drastic change in the prices can be because of the situations also. If it is 2010, now in 2022, if people would have gone IPO, they would have crashed because nobody would have been there to invest because of Corona and COVID. But now, if you see, people are flocking into IPOs because they know right now that we are doing great, and the geopolitical, uh, um, factors also taking place. If it is a coalition government, like two political party coming together, political stability of a country is equally important, right? When you're doing investing, because each IPO, these IPO, Swiggy's and international FDIs, we are talking about crores, hundreds and thousands of crores. We are getting deals to, we are getting deals to break every day. At least the minimum value is almost like 200, 300 crores that international banks are investing into this Swiggy IPOs. what would they think? They would not just think, what is Swiggy going to do? They would think, is my money safe in India? Would you guys invest in Syria? No, right? Would you guys invest in Somalia? No. Why? You know your money is not safe. Would you invest in China? Even though we hate them politically, financially, economically, industry wise, we would still say yes because we know we have got confidence that they will grow. Do we invest in India? Absolutely, because of this power, right? This young generation power, the people power that we have right now. So it 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 all plays into the mind of an investor. It is not just okay, he told me this, I'm doing this. No, it has to go. Who is your underwriter? Can we read between the lines of the investment banker? Right? Can we read the prospectus clean? Can we understand when they say cold storage? What does it mean? Does it mean cold storage cannot be used for processed? I mean, they can be used only for a few set of foods like processed foods or meats and fishes and things. What happens to rice if you keep it in a fridge? It doesn't, right? It goes waste. So the next question to the investment banker or the underwriter who would be marketing Swiggy for you is, okay, they are doing cold investment. I mean, cold storage. Perfect. So what happens to the provisions? Are they planning to have some dry godowns as well or dry warehouses to store all these things? But all that at this moment, if we see, we go by the name. People invest just it is Swiggy, it is Reliance. How many of us know to read the balance sheet? Again, it is not wrong. I'm not defaming or demeaning anyone, but that is how we are, right? And that is why you see the literacy level of capital markets and investment in right now in this generation is much, much, much higher than what it was previously. Because we've learned from our mistakes. We've learned from the bad things that has happened. You talk about Enron, you talk about this, you talk about Lehman Brothers, you talk about whatever it is, Byju's, which was one of the best, and now the company's value is almost near to zero. Tomorrow, any one of us can go and buy Byju's. The reason is very simple. It overhyped itself, right? The company overhyped itself, and they were not able to deliver the results, right? Okay, so in constant um, admiration of the time left. But guys, please understand whenever there is an IPO, understand there is a huge backing also from the underwriter, and he will ensure that the prices are stable at least until the prices stabilizes in the market, right? And why do investors trade? Very simple, to earn profits. I buy it at 100, I sell it at 110. I am done. I buy it at 100, I hold it till I have a purpose like education. I have a purpose to buy a house, investment. That is where the long term, short term comes into picture. Right. So all these factors, not just who is in the market, who is backing it up, right? Who is the owner of the company? What are his commitments or her commitments? Is the government, if the government starts investing in one of the IPOs, everybody will blindly follow. That is what happened in Reliance as well. Because can a government go default? No, a company can go default, but not uh but not a government, because the worst case scenario, they would not be worried about their inflation, they will start printing money. So if that government invests into a company, what is the biggest backing you will have ever? Government, right? So all these all these factors are important from a primary markets perspective, and secondary market is purely investment trading decisions that you guys take. Do you want to sell it now? Do you want to hold? Do you want to do a short? Do you want to cover the short? I mean, obviously end of the day you need to cover it, but it is your investment strategy that drives it. Somebody says something about the company, news, right? I don't know if you guys have covered efficient market theory. It it's the news that runs the secondary market, not the actual fact. Now, if I'm going to say Swiggy will, I know after this IPO, I've seen Swiggy placing order for 1,000 electronic bikes. Two things will happen. One, Swiggy will go up. The market for electronic bike will also go up because they know the demand is there. They will earn more profit. More of profit means more companies value. More companies value means more equity value. Very simple. So this news, you will not validate if it is correct or wrong. Investors Layman investors like us, we will not validate. We will go by, WhatsApp forwards. We would go by recommendations given on TVs and things. Please understand, people take money to recommend. Give your vigilance when you're investing, right? Then what happens after this trading? So there are issuers. Um, Ola was overhyped. I agree, but sorry, but we are not here on a technical analysis theory to see what happened to each and every IP. I would love to do it. But yeah, thanks for the overhype. Exactly the reason why it failed, right? It was overhyped. Corporations, they are the issuers. They issue securities in capital markets. Investment banker, underwriter, broker, depositors, credit rating agencies plays a very vital role. I don't know how many of you are aware of credit rating agencies, CRISIL, and all those people, right? Because see, Moody's, Fitch, S&P, all these are very, very important credit rating agencies because they rate the bond or the equities based on the financials. So if it is an A plus, it says no risk at all, clean, we don't have any issues with it, invest. Junk bonds, highest rate of returns because your risk is very high. It can go bad, it can go junk any single time. It can go into liquidation any single time. All right. So credit rating also play a very, very major role, right? It is like accreditation to colleges. You see, deemed university takes a different value. Accreditation to UGC takes a different value. CBSE is a different value. IGCSE is a different. Same thing. When a credit rating gives duly correct rating for the bond, it takes, it really takes up a lot of value. Custodian, predominantly the region
என்னப்பா
where
சொல்ற?
I am
வாங்கி தரியா
working
இல்லையா
in.
நீ?
So,
1200
the
ஏசி தான்
place where I
வாங்கிக்கிறேன்.
am.
நான் வாங்கிட்டு காலையில டன் பண்ணிட்டேன்.
Anil, would you say?
Thanks. So what does custodian do? It is very simple. These are all jargons that we use, but if you look very closely, we are very used to it in our day-to-day life. Custodians, we feel it is very financial, it is very hype. Nope. Very simple. If I think like the first question was, do you have a bank account? Everybody said yes, most of you. Second, I'm sure your parents would have a locker in banks, right? What do? You go to a bank, you ask them for a locker, they charge you for the space, and you keep all your valuables inside the locker, you lock it, and it becomes the responsibility of the bank to safeguard your precious things in the locker. Custodian, matter over. Right? So I hold your assets on your behalf in my account, and whenever you are doing, because this will reduce a lot of management activities, lot of paperwork for you, lot of administration activities for the company, and you guys can concentrate on your core operations. Right? So whenever you want to withdraw or whenever you want to do a trade out of the custodian's account, what do you do? Simple. You send an instruction saying, can you debit or credit this account with so and so shares, so and so money, so and so, margins or whatsoever not. So that is primarily, the role of a custodian, right? So those are the intermediaries. Who are the regulators? Obviously, is the Security Exchange, local regulator, like our SEBI is here, right? And what is the investor? The retail investors like you and me, high net worth and institutionals. And in few cases, obviously, the governments as well, right? So what is investment banking now? So these are all, I know I am not going to touch into everything, but in case there's anything that you want me to do a, touch base on, we can have a separate. But this is the primary role of an investment banker. They help in corporate finance, they help in mergers and acquisition. In fact, the primary source of income for investment banking is merger and acquisition. People think IPO. No, it is mergers and acquisitions, right? Equity research. Again, I will be very, very, lavish to people who pay me huge. I will be very conservative for people who don't pay me. So equity research on a bank is different. And that is why if you see the market, one equity investment bank will say sell this share, the other investment manager will say buy the share, right? because they have different views of it. So it is up to us to give cautious decision before investing, right? Obviously, fixed income trading, underwriting, the IBO that we just told. Private placement. Now, this is very, very peculiar, very simple, or I would say very, very different. Because what is private placement is very simple. IPO goes to mass media, right? It goes to the entire public, whereas private placement is like a small, uh, private set of people or closed group of people where they will issue shares and they will ask for money. So even this is happening. So they can go to JP Morgan and they can go to Goldman Sachs and say, Goldman, can you just talk to your top 5 clients and ask them to invest into my company? That is private placement. If you go to Goldman Sachs or JP or SBI and say, SBI, can you go to the entire public, retail investors, and sell my stocks and ask them to influence? That is a normal IPO, right? So private placements are a bit costly, a lot of reputational risk because you put your name in line because of this company, right? We just touched this. The difference between equity and debt. We saw ownership, risk is high, issuers. So we just touched base on that. Trade life cycle, and this is where we start off, right? Like this is how the investment banking operations in the globe are divided: front, middle, and back, right? Front office is the place where the trading is being done, like the traders or the investment managers, the fund managers, they all sit there and they take strategic decisions to buy or sell each instructions. The middle office is a place where the trade enrichment happens, like they add more, like they add standard settlement instructions, and they check if there's positions, they have treasuries, and they have, they check with trade affirmations, right? The back office is where they call up people. There's something called pre-matching, where they call up the counterparty and they say, okay, this is what is my, I see this trade in the market, do you also see it? I sell, you buy. So all these trade economies they confirm, and they do the trade settlement and they do the trade reconciliation, because reconciliation is very important, because you would have given the share, you should know if the money is received into your account or vice versa. And that is why reconciliation also forms a very, very important piece of this. So every piece that we see here is a career growth for us, right? In investment banking, these are the basic career hierarchy that we see in an IB, right? It starts with an analyst, goes at analyst will have entry level analysts, senior analysts, and then we have associates, and then we associates includes up to general manager, right? They call it associates, and they do have various designations. Generally, don't go by designations, guys. Go by the nature of work you're doing, right? That is predominantly very important. The third is the vice president who manages the entire operations and at an GD level, like global delivery level, or India level, or whichever region level head. And beyond that is the director, senior vice president, and the MD. Right? These are the basic hierarchy levels that any one of you will enter into investment banking. Right? And finally, this is something which is very close to me, even though it's last. I guess this is important for all of us, right? Don't let the noise of others' opinion drown your own inner voice. This, if implemented 100% in any of your life stream, I think it would be successful. Be it investment, be it career options, be it professional life, personal life. I guess that is going to help, right? So I guess we are just on the trot. So um, thank you so much for your time. I think I know we wouldn't have some Q&As, but I think we just have 30 seconds. I don't know if it can be extended. But other than that, this is very important, guys. I wish all of you a very, very successful career in investment banking or it is not rocket science. It is simple. It is like maths. If you understand, it is simple. The problem is we do not put effort to understand it. Right? Textbook is different, floor is different. So I wish you all the very best, and I hope I cross roads with most of you or all of you. And if opportunity, I would try to meet you guys again. But overall has been a good discussion. I hope you guys have benefited
One
out
doubt,
of
sir.
this. Yes, please.
Sir, mutual fund will come into this, right? Actually, in the
Yes,
capital
yes,
markets.
yes,
Okay.
yes. Just give me 1 second. Okay, it got extended. Thanks. Yeah, I think Nanda sir, do we have like 5-10 minutes? I mean, all of the participants as well. It's your personal time, guys.
Yeah,
Do
we
you have
still
like 5-10?
for the Q&A.
Yeah.
Either they
Yeah,
can unmute themselves and ask, or maybe put the question in the
perfect.
chat so that Shamima will read out to you.
Perfect. Super. Thanks. So yes, for mutual funds is part of capital markets, right? The difference is very simple, guys. See, you need to know now Reliance is one single stock. If it falls down, you loss. If it goes up, you profit. Very simple, right? The name is that's where I say the capital markets concept is in the name. It is called mutual funds, which means all of us mutually invest into a portfolio of securities, right? So, mutual fund is part of investment banking, but what happens there is a normal security trading would be for one company, whereas in mutual fund, it is a portfolio of companies. Now, I don't have, say, like IHM Motors, right? They were like, I think they went up to 1 lakh or 2 lakh or whatever the price range was. Even if it is 5,000, 10,000 right now, I'm not able to buy one share. But I am interested to be a part of it. Mutual fund comes there. So it would have that bucketing, right? It would have sectors, financial sector, banking sector, infrastructure, hospitality, right? Medical, all these index funds, all these will have individual funds. And all the companies in this sector will be portfolio and they would send out in the market to invest, like investors like you and me. And then the price will be weighted average. So the price will not be 5,000, it will probably come down to 250. The major difference between a single stock and mutual fund is in single stock you have a
Yeah,
price,
I taking a
whereas in
mic.
mutual fund, sorry. Okay. So in a single stock, you take up something called as a price, whereas in mutual fund, it is called NAV, net asset value, because it is a group of differently priced companies. So one company is 10 rupees, another company is 20 rupees. What price do you come? Simple calculation 10 plus 20 by 2, 15. That is what you will invest, right? So the NAV is a different calculation, but yes, mutual fund is a part of investment banking. And for first timers, whoever is willing to invest into market and they don't have sufficient knowledge, I would suggest mutual funds because your risk is very less and it gives you a minimum, and if properly planned, it gives you a minimum of 20 to 25% returns. And you can start out an SIP, right? Systematic investment plan, as low as 500 or 100, depending on which company you go in. So start off with mutual funds, monitor it for 1-2 years, see your wealth grow, get your knowledge onto investment. I mean the capital markets, at the stock markets, learn which company is going to go good, bad, ugly, and then start investing. That would probably help you create a lot of wealth, long-term wealth, to make your life better. I hope I answered that question.
We have a question from Krishna Prashant sir. He would like to know whether
Yeah.
there is any certification or book where he can get a better understanding on this.
Understanding on this is the entire investment. So see, two things, right? Yes, there are courses. First thing, you want to do a like within India course, or you want to do an international course. I think the top course for all of this knowledge is CFA, right? Certified Financial Analyst, which is given by GARP University, GARP University in the US. That is going to be your topmost. But I think NSC, NCFM is happening. It is like 1,000 rupees per certificate, where you start getting the basics, right? So understand that there are courses. I think Imarticus gives you few. Coursera is giving you few courses. Knowledge Hut is giving you few courses. So there are courses which are available. And I'm sure for people who've taken MBA and finance, you would have SAPM, right? Security Analysis and Portfolio Management. So that should also help you. But yes, there are a lot of certifications, and the top is CFA. It is
Excuse
just
me.
1 or 2% pass. Yes.
Hi, I would just like to correct you. The CFA is given by CFS Institute. FRM is given by GARP.
Both FRM. Okay. So if GARP is FRM, then CFA is CFA Institute. Let's check that again. So I apologize if that is different. But yeah.
Oh yeah, just want to make sure so that no students get confused.
No worries. But CFA is where I would put my money on.
Deepan would like to know more about SIP and ETFs, sir.
SIPs, see, again, as I said, ETFs are electronic traded funds, right? It's as simple as what's the difference between the two? Very simple. Mutual funds are NAV, which is calculated at end of day. ETFs are, real time priced. So I would want to check if we have SIPs for ETFs, but more importantly, SIP in any form is very good in terms of long term because you take advantage of either the falling market or the rising market, right? In fact, you need to invest in SIP when the market is falling because you get more units because your stocks price gets cheaper. So you get more units. And when the price increases, your value of the holding will increase accordingly. So people generally stop when the market is falling saying it is a loss, but I would say please invest when it is happening. And it happens with the same with ETFs as well because it would also be a fund level, fund level investment. So in not see when we talk about Sensex or Nifty 50s or whatever, it is not that the entire stock market fell down. It is just a yardstick that the top 30 or top 50 companies in the index have fallen. There are so many other companies which are in green when Sensex is red, right? So this is where mutual funds will come into picture. The loss of one can be mitigated or negated with the loss of others. So invest there, have a monthly SIP put in. If you're not very confident on the monthly SIP, don't put huge amount, right? Start off simple, monitor it. Every mutual fund will have your description, it will have the holdings, it will have the holding percentages, what ratio, what is your exit amount that you need to pay, what is the load, exit load, entry load. all these all these all these are there in these are there in those prospectus, if I may say, for mutual funds. So you would want to view that very, very clearly, but at the same time it is very important that we start investing when we are young because the markets, you know how it is, right? It is going very, 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 very high. And if the political condition stays the same, I'm sure we are crossing, I think 30 trillion is what we are targeting by this 2030 as India's thing. I think somewhere there. But yeah, good time to be in India for sure.
Sir, could you please tell us if you want to invest in any security personally, what are the aspects that you see in that security?
Okay, so two things, right? Again, one, what has been their past? Right. Second, what is the risk appetite they are taking? I would not get into oil and shale companies for a simple reason that they show balance sheet hyped up saying if the oil companies, and that is why you see you will not have a lot of oil company ETFs or bonds in India because it is very simple. Shale investing, right? Shale exploration. They will say, I am doing my exploration in this part. If I find gas, this is going to be my biggest finding, and that is so much dollar amount or so much rupee amount, and they will add that into the balance sheet saying potential assets, right? And then the balance sheet will pop up, the price will go up, and if they don't find anything, they have a provision legally to write off the entire finding, and they said I could not find anything. So whatever I mentioned there as my asset is now not say 100 million, but it is only 10 million, right? So that is something which I will not, for sure. I would go, I would not go into the top companies, right? I am not getting into Apple. I am not getting into Samsung, for example. I will not get into Tata Motors, but I will get into the persons who are supplying the details to them or supplying the inventories to them. The reason is if Tata Motors does not have a profit, these guys would still be giving them that deal, right? If Tata Nano is not successful, it comes out with Nexon, it would still need that engine. It would still need the tire. It would still need the aluminum. It would still need the plastics. No matter what you say, Tata Harrier, obviously great. It still needs the tire. Nexon stopped, Tata Harrier. Perfect. So what? The, the company which is providing inputs to the main company will always have business. Reliance Power would have gone down, but the persons who are giving wires to Reliance Power will either give it to Reliance Power or now would have been giving it to a TNEB or Maharashtra Electrical Board or whoever it is. These companies are the ones which I will target. There is a
Yes,
theory
yes,
about penny stocks. There is a
yes, sir.
theory about penny stocks. Not a huge fan because there is a huge upscale in it. We think penny stocks today is worth tomorrow, but we really need to understand and pick out the correct penny stock. This company is undervalued by so much. Who says who? A person who then what did the other person investment banker who did the valuation? So who is wrong now? So like I said, I would watch for tier 2 companies. I will not get into tier 1 companies.
Actually, I also experienced it, sir. When I invested in Vola and Gabriel, actually, I get more returns on Gabriel than Vola. Because
Correct.
this,
Because see, they give the products to them, right? Ola
yes,
as a company might fail, but this fellow will not just give it to Ola, they will give it to other people also. Like,
yes, sir.
I don't know if you guys, I think it was one of the camera for iPhone was given before they moved on to Kalsis was given by Samsung or Sony. And the battery also was between Samsung and Sony. Someone's Samsung, I guess. So Apple iPhone, you say 14, 16, 20, whatever it is, the spare parts is given by somebody else. They
Yes,
still need the screen. The difference is you need a 16-inch screen or you need a 20-inch screen. That is a completely different ball game. That is Apple. But I'm still giving you Kalsis, right? Very simple. Kalsis is my best company to go with. Why you want a DSLR Kalsis? You need a mobile phone Kalsis. You need a spectacle, right? You have lenses.
Yes, sir.
So I am not worried about Apple going bankrupt or not. I will be more like, Acha, Ray-Ban is using Kalsis. Super. Sony DSLR is using Kalsis. Awesome. So that is my take. Even though, I am, because of my role that I'm playing, I'm not allowed to invest into stocks. But given an option, this is what I would do. But yes, I have a huge investment into mutual funds because to be on a safer side. But as a trading and I have my limitations because I'm a part of investment banker.
Okay, sir. Thank you.
Most welcome.
Sir, Aditya Jalan has a question whether we have to do MBA to become an investment banker or we can start working right after BBA.
You can start working out of BBA. See, I will be really honest, right? All these degrees are your gateways. It is just your entrance ticket to the Disneyland. Now, where do you want to sit is depending on the knowledge that you possess. So it really doesn't mean, see, I have almost 400 people in 5 different cities in India. Not everybody is MBA. And I will be brutally honest, right? There are people at a UG level, at undergraduate level, who are much more brilliant than MBA people. Not to demean anyone, I being myself, I being an MBA. The reason is about passion. It is about how you understand the thing, right? So that mindset, I'm not blaming you or I'm not telling you are in that conclusion. But if anybody is thinking MBA is the only way to get into this, no. Rakesh Jhunjhunwala, he wasn't an MBA. I don't think Warren Buffett is an MBA too. I don't know what his designations are, but no, Steve Jobs was never an MBA. He got an honorary doctorate and all those things. So it is not about the degree, guys. It's about how much you learn. The textbook knowledge you write on paper is different. That is just to score marks. Understanding it gives you that ample opportunity and not just entering into investment. I'm sure if you have the correct knowledge, even though you're just, an undergraduate, I am sure you should be able to, go places. You will be able to lead bigger teams. You would be able to make it in big leagues of people just based on your knowledge. And degree is just one passport to it.
Yes, Shamima, I think you can go for the vote of thanks. Rest of the questions will be answered by email.
Indeed, 1 hour is very short to comprise 15 years of expertise in the finance field. When I got too old to save in the piggy bank, and when my siblings and cousins got too clever and could open my piggy bank, I started to use a bank account to save my money because I might need it later on. Turns out, even the government needs funds to rely on, and that my savings in my bank account is also the reason why I'm late to my office every day due to metro rail constructions take diversions. My first thought was it is not enough for the government to just get my taxes alone, but it also receives my savings as debt from the capital market as equity and debts. I'm sincerely hoping that I get a deep discount after the infrastructure projects get over. I am a student from the finance domain, and I thought it is very cool to be the executive to be involved in high stakes in executions like IPO. But I was pleasantly surprised that even the marketing department plays an equally or sometimes an even more important part in the process. Now I'm glad that we learn more about marketing in the first year itself. Participants, if you are a first year student, please pay attention to all subjects, and this is your sign. Because when we all graduate and move to the field, your reputation will depend not just on your performance, but also on your friend's performance that you vouched on. We might all be simple book readers today, but we are all going to aim for the stars to be book builders someday. And thank you, sir, for emphasizing on the importance of vigilance when it comes to deciding on investments. Real life differentiation about trade life circles into front office, middle office, and back office was informational, while the information on career hierarchy was deeply inspirational, to be honest. I'd like to thank Mr. Srikanth Lakshmikantan, the Vice President of State Street India Private Limited and the India Head for Custody and Settlement, for sharing his wisdom today and believing in the power of younger generation also. I'd also like to thank Dr. Manoranjan Ponram, Director of Online and Distance Education, SRM IST, and the management of SRM for organizing this program. I would also like to extend my gratitude towards Dr. M.L. Jnanadasan, the program coordinator at MBA SRM IST, who also surprisingly turns out to be the faculty for our guest speaker. And last but not the least, thank you, dear participants, for your attentive and cooperative energy throughout the session. Happy weekend, and over to you, sir.
Okay, thank you, learners, for your patient hearing. Rest of the doubts or chats, whatever questions you have put, will be answered in the email. Once again, I extend my hearty thanks to Mr. Srikanth for his time and his patience in preparing the slides and all that and taking off from his busy schedule. Thank you, Srikanth. Thank you.
Thank you, sir. Thank you, sir. So it's been an absolute
Thank you,
pleasure.
sir.
Good interaction levels. Thank you so much. Looking forward to catch up
Right.
again. Thank you so much, guys.
Thanks, sir.
Have a
Bye.
great weekend.